In this video, we'll explore one of the most crucial concepts in price action trading. Here's what we'll cover: the distinctions between bearish and bullish breaker blocks, methods to uncover hidden supply and demand zones, the significance of support and resistance flips and their impact on our trades. Finally, I will show you the exact steps I take to find the most optimal breaker blocks to trade from step by step. If you're ready, let's dive in. Alright guys, this is our fourth video on our price action and SMC course. We have previously discussed market structure breaks, order blocks, imbalances, and now breaker blocks. Although it is a straightforward idea, it is incredibly effective. So what exactly is a breaker block? A breaker block is essentially a failed order block. If this sounds confusing, don't worry. Let's examine this chart to make some sense of this. We frequently observe breaks in structures that subsequently form order block zones. However, if every order block was successful, we would all be incredibly wealthy. As shown in the chart, our last order block formed a demand area following a break of structure. The anticipated move was for the price to drop and respond to our demand area. However, this did not occur. Instead, the price broke down further, resulting in a market structure break. Consequently, our failed demand order block transformed into a supply breaker block. The price then reached the new supply area and reacted accordingly. It's quite a simple concept, guys. It just takes some practice to master. So let's look at an example. In this example, we were experiencing a minor uptrend. The price surged upward, creating an imbalance. The final red candlestick initiating this move marks our order block. Typically, we would expect the price to reach our order block and respond accordingly. However, this doesn't always happen. As seen here, it fails, leading to a change in trend direction with this market structure break. So what happens next? The order block transforms into a breaker block, turning our failed demand zone into a supply zone, almost similar to a flip. The price then moves to our new supply zone and reacts strongly from there. Additionally, it fills the small imbalances before this big fall. So let's see how this concept applies to bearish order blocks. When an order block forms after a break of structure, it's often seen as a signal of a supply zone. Traders typically anticipate the price to rise, interact with this supply area, and possibly continue downward, causing another break of structure or BOS. However, markets are unpredictable, and sometimes order blocks fail to hold, causing the price to reverse direction instead. In such cases, the failed supply order block quickly transforms into a demand breaker block. This shift signifies a change in market dynamics, where what was once perceived as a supply zone now becomes a demand area. You can think of this as kind of like a flip in market sentiment. Moreover, before making another significant move, the price often fills smaller imbalances. Like I said, guys, if it looks complicated, don't worry. It becomes more straightforward with practice. Let's walk through an example to see how this plays out. But before that, let me tell you about the simple formula. If you're like most traders, you've probably spent countless hours searching for that one profitable strategy. You watch tons of YouTube strategy videos, jump from strategy to strategy, and yet you're just unable to find that winning indicator or strategy. Well, if this sounds like you and you're wondering why this sounds familiar, it's because I used to be in the exact same place as you. And I get how horrible this feels. You waste tons of money and, worst of all, tons of time. That's why I developed the simple formula. This course explains a powerful trend-following day trading strategy for trading futures, stocks, commodities, and forex. The simple formula is easy to understand and to trade. This approach doesn't require complex trading software. Basic charting tools like TradingView is all you need. Thousands of traders have used this strategy already. Don't miss out. Get instant access now for a limited time. Okay, back to the video. The price makes a strong move downward, creating noticeable imbalances in the market. That initial green candlestick that kicks off this downward movement, that's our order block supply zone. This looks like a great setup. This really drives home why I always stress the importance of looking at both high and low time frames together. If you only focus on higher time frames, you might miss crucial details like regular breaks in market structure that show up on lower time frames. Now, after seeing this example, the next steps become clearer. Our supply order block now flips into what we call a demand breaker block. This shift happens as the price rises back up and revisits our newly identified demand area, where it reacts accordingly. Here's a tip: don't delete those order block drawings on your charts. They're not just for show, they're handy for identifying potential breaker blocks, new supply or demand zones, all of which are vital for making smart trading decisions. The concept of breaker blocks is really similar to the idea of support-resistance flips, but instead of fixed lines, we're looking at broader zones or areas. This approach makes it easier to spot good entry points across different time frames, which is key for a good trade. Let's look at an example. If you observe this chart without considering order blocks, breaker blocks, or without any specific price action setups, you can see how support resistance or supply-demand flip zones occur and affect price movements. These concepts are invaluable for adding extra confirmation to our layer system. As shown, the price breaks a level and establishes a demand area with the order block. However, when the weak order block fails to hold the price, we see a strong downward break. Notice how the price reacts sharply to the newly formed supply area. It's quite remarkable. You might also notice pin bar rejections, including classic patterns like the evening star candlestick. However, a more optimum entry would be to use a low time frame and confirm a micro MSB. Let's discuss the most effective strategy for trading breaker blocks. In this final section, we'll see how we could identify the most powerful breaker blocks. There are several key factors to consider in identifying optimal breaker blocks. 1. Weak BOS. One important aspect to watch for is a weak BOS, break of structure. Make sure that the market was looking to hunt stop orders rather than creating a strong break. 2. Strong reversal break. We need to see a strong reversal break, breaking this failed demand or supply area. 3. Imbalances. Identifying imbalances in this strong reversal break is always a good sign. It gives me more confidence in the setup. 4. SR flip. If you can also spot a support resistance flip, this could be the cherry on top. Based on my experience, these work great. Alright, so let's look at a real example. Firstly, spot the weak BOS. You'll notice a pretty weak break of structure, BOS, happening here. It's also known as a swing failure pattern, designed to trigger stop losses and add liquidity. See that red candlestick? That's our order block, and this would be the demand area. Now, onto the reverse strong break. Look at how one big red candle just wipes out the demand area in one go. This change flips our earlier demand order block into a supply breaker block. Next up, imbalances. It's clear as day. Big, useful imbalances right there. Perfect setup so far. And finally, the SR flip. This area used to hold as a support zone, keeping the price steady. But with our strong break, it switches roles and becomes a resistance zone. Finally, see how the price reacts from this breaker block? It's pretty straightforward and impressive to watch. Also, notice the pin bar rejection and the evening star pattern that happens at this zone. Just perfect. Now remember guys, these price action patterns occur repeatedly throughout each day across every asset. With a little bit of practice, you'll gradually be able to catch them all. Alright, so I hope you've gained valuable insights into breaker blocks trading and its applications in day trading or scalping. If you have any questions, feel free to drop them in the comments. I'm here to help. If you enjoyed the video, please consider subscribing to the channel and giving it a thumbs up. See you soon.